Maverick traders, welcome out to your market roundup for March 20th, 2023. Corey here with you. As always, a quick reminder to make sure that you follow your trading plan. So I happened to do the trading room over the weekend. As far as the market setup is concerned, one of the big shoes to drop, I kind of talked about it, seemed like in the financial sector there was another shoe that was going to drop, stress in Credit Suisse. Sure enough, they worked. There were emergency meetings all weekend long. Credit Suisse was taken under by UBS. And the reason it's a take under is because they valued the buyout is for $3 billion. They closed on Friday worth $9 billion. It kind of tells you how stressed that market was and how much they were having a run on that bank. So it was a take under. They're buying it out for 1/3 of its value. Even more to the point, UBS is only paying $2 billion. The Swiss government is covering $1 billion of that. So there's this panic, there's this nervousness in the markets, and that's just a perfect recipe for Bitcoin, for gold, for silver, for just kind of a risk-off scenario. Now, the VIX spiked dramatically higher and then came down and basically closed on the lows, and the markets rebounded. Dow up 1%, S&P up 1%, IWM, the Russell 2000s up 1%, oil up, gold up a little bit. Notice the laggard was tech, and I made mention of this in the weekend trading room that I kind of pounded the table a week ago. When I did the market roundup at the first part of last week, tech was really well set up, and it was this perfect storm of interest rates had come down a lot. That's great for tech. They weren't right in the eye of the storm like financial companies. They were set up really well with this bull flag and so on. And I just think it switched. That was a quick trade idea. It surged about 6% higher. And I made mention in the weekend trading room, I much preferred buying something like energy for a quick trade versus buying technology. And tech was basically flat on the day. In fact, if you take away Apple, tech was down on the day. Apple kind of was all of its performance. Oil, energy, they were up about 2%. So in one day, you have 2% outperformance in energy. I think there's a little bit more to go in that. I mean, we're talking about quick trades, but that's how volatile these markets are. And everything I think you do in the markets with this type of volatility can just be scaled down a bit. You don't have to take huge risks. You can kind of scale back your risk. Advanced decline line, about 60% of stocks up today, and the 50-day moving average decidedly bearish with 80% of stocks below the 50 MA. But make note, it's up, down, up, down, up, down, and then again, we were down on Friday, up on Monday. Do we break that string, or does Tuesday bring a downward push? All else being equal, you'd have to look at this market performance and say, with all the headlines and bank failures and this and that, wouldn't you anticipate that the charts of the S&P and the NASDAQ would be worse? We are trading good on very bad news. That is what we call a market tell. The market is telling you that this was the exhaustion low we thought it was, and now we're on a little bit of a bounce. I don't think it's the type of bounce that carries us dramatically higher, as in, I don't think the market has hit the bottom, but we've bottomed out. And look, this can correct for a couple of weeks, and that really doesn't do much in terms of the big picture, and we probably still ultimately go lower. I think we're headed into a recession. The yield curve is getting uninverted, and basically the recession historically hits about 2 to 4 months later. Stocks usually bottom right in the middle of the recession, so we're probably bouncing a little further here in the short term. I think we're going to get a push. I think that would surprise and confound and be a little bit of a max pain where people aren't expecting that. I kind of look at it as, if you take sentiment, if I was to go out in this environment where everybody has heard about the bank failures and they're nervous about their money, and if we were to poll 10,000 people and say, do you think markets are going to go up or down? Are you bullish or bearish? I bet you 9,900 of them are bearish. You know, it would be the vast majority are highly, highly bearish. So sentiment is bearish. And again, markets are pushing higher. They were up last week. They're up so far this week. It's a little bit of a market tell. Of course, we have the Fed meeting on Wednesday, but what is the market sniffing out? Why is the NASDAQ pushing higher? Well, I think number one, it's pricing in that the Fed is closer to finished. It's not going to be raising as aggressively. All of this happening in banks is deflationary. It helps the battle against inflation. Lower interest rates are already happening. The flight to safety that we talked about in the market roundup last week, when I pulled up the SHY, the 1 to 3 year, and showed that chart and how the bond market, the flight to safety was already relieving some of the stress. I think that's in play. And I have to think personally that there's some sort of change about to transpire in the markets generally. What I mean by that is right now there's a huge flood of capital out of regional banks and into the biggest banks. I suspect there's going to be an announcement where maybe they raise the ceiling. You know, it's been 250,000 has been insured for the longest of times. It's probably due for an upgrade, but they might go big. They might say 2 million is insured. They might really go big with this, and it certainly seems like the markets are pricing in something. Something is coming down the pipe because markets are trading very well in the midst of this bad news again over the past 10 days or so. So let's not get too carried away, but trading pretty well here the past week and a half. As we look at the map, certainly green over here in energy, green in most things. A little bit of single stock issues, Google, Amazon, Microsoft. Like I said, Apple was really holding the NASDAQ up. I think the trade to the upside really in the NASDAQ was a trade, and it's mostly played out. Can it go a bit higher? Sure, but if the market's going to bounce like I think it can a little bit further, then actually it could be these commodities like energy and materials that get the better bounce back. Now, everyone thinks they've got to be involved in financials. I'm just not sure why we would have to get heavily involved in financials at all. They're so vulnerable to the next piece of news, the next piece of this. There's just when you look at risk adjusted returns, think about a day like today. Energy's up more than financials, and it has way less risk to headline news and all of that sort of thing. So I just don't need to stick my neck out there and be heavily involved in financials. Last week we bought tech. We could be short financials potentially or long financials potentially, but either one of those is just so vulnerable to something coming out that moves that stock or that sector dramatically. You could be in one of these regional banks and they can move 15% in a flash. So financials, I don't think we have to mess with them. I don't think we even have to get involved in what's happening there. We're below the 20, below the 50, sloping down in the 20, sloping more up or sideways in the 50, but ultimately this is a bearish chart, big picture. I wonder if we're going to kind of come up towards about here, towards about this, 4,000-ish range. Maybe we come up underneath the 50 MA. Ultimately, I do suspect we're going to have another leg lower, but you can push. We've already pushed a few percent. You can push another 3-ish percent, 4%, and that means that in stocks that have higher beta, you might be moving 5, 6, 7% to the upside. So it's not unworthy of our attention if that's how it's going to play out. Let's look at some potential bulls and bears. On the bullish side, starting with ABV. Now, because there's a lot of overhead support or resistance up here, some dead bodies, that overhead resistance has me inclined to want to kind of buy the dip. Maybe a little cup and handle or ascending triangle type of idea. If we get a little dip here in the next couple of days, it would be on my watch. Lennar is a home builder. When you think about home builders, you'd have to think that a lot of things that are happening in the markets, how do home builders keep going up? And it's just good price action. It's just a rounded bottom that's kind of forming here. We're in the pullback that could be towards the bottom end of the range. So look for a little support here in the next day or two. And if we get it, we can buy the dip for the next phase to the upside. Last but not least, Roblox. And this one's probably my favorite in terms of the bullish ideas. Again, in buy the dip mode. I'd love to see tomorrow down a little bit further and then buy that dip, kind of, again, cup and handle, a little ascending triangle, whatever you want to call it. You've got this upward rising lows. You're stalled out at the resistance, and I like to buy the dip in that scenario. So it needs to come down a little bit further, but Roblox looks really good for a potential buy the dip candidate. On the bearish side, so stocks we might consider to the downside, Crocs, bearish engulfing formation, probably at the downtrend line right here. And sometimes when you break the 50 MA, you can see if it responds to that, meaning did it first spike away? Second, did it come back and show that it's getting resisted? If so, this kind of kiss goodbye is a good setup for the downside. Look at how this stock responds to its 50 MA. So I want to see that it pays attention to it. I want to see that the break is clean. And then when you get the retest and you get a candle formation like this, it sets up for the next wave. And in the case of Crocs, looks like we should push to the downside. Qualcomm, another consideration. Again, this would be an example of responding to, bounces up off of, breaks this level, kind of coming up underneath. You might get a little bit more push here in the next day or two, but that could be a sell the rally candidate in Qualcomm. And then last but not least, Walmart. This one I look at as kind of, we broke out of a symmetrical triangle, a consolidation. It spent literally weeks and months right in this consolidation. When we finally broke to the downside, now you're kind of coming up underneath. And I didn't draw that perfectly. It's more like this probably. But ultimately, you broke this level, and then again, you're kind of testing from underneath. Notice how today, as we jumped up, we fell off of the highs, leaving a little bit longer upper shadow, and looks like we should back and fill. It's going to be a slow mover. It's lower beta, but that would be the idea there in Walmart. So markets are holding up really well given the spate of news. And I always say news is just news, but the market perceives it, the public perceives it as really bad news, but we're getting bullish price action. And the bullish price action trumps that, and in some ways is very good setup because you know you have all those people short and negative that can fuel that next wave to the upside. We've got the FOMC meeting on Wednesday. That is anticipated to be a 25 basis point hike, which is lower than previously anticipated at 50. And it looks like the terminal rate where the Fed's going to stop is going to be a lower level. Earnings reports, you've got Chewy, Darden Restaurants, General Mills, GameStop, Nike, plenty of companies there that are reporting, and we're moving towards earnings season coming up and kicking off here in a couple of weeks. So hope you enjoyed the market roundup today. Have a great rest of your week. If you want to play in the financials, do so carefully because you're one headline away from some major volatility. I think there's just good risk-adjusted return opportunities and other things where I don't have to take all that risk and I can make similar returns, so why deal with it? Have a great rest of your day. We'll see you next time. Goodbye, everyone.